In this video, I'm going to go over the difference between gross profit and net income. Now, the short of it is gross profit is taking your revenue and minusing your cost of goods sold. Your net income is taking your revenue, minusing your cost of goods sold, and all of your other expenses. So I put together a little file here that I'm going to share with you guys just so we can go over exactly what it is. So again, I get this question all the time after writing 2,000 business plans for clients and developing strategies for clients. What is the difference between gross profit and net income? So I put together this little guide for you. The definition of gross profit, very simple, is the amount of money a company makes after deducting the cost of goods sold from its total revenue. It represents the profits made from its core business activities before accounting for operating expenses, taxes, and other non-operational costs. So the formula here is gross profit equals total revenue minus cost of goods sold. Okay, so the purpose of that is to indicate how efficiently a company is producing or delivering its products or services. Higher gross profit margins suggest that the company is good at controlling production costs relative to assets. Net income, on the other side, also known as net profit or bottom line, is the total profit of a company after all expenses have been deducted from total revenue, including cost of goods sold, operating expenses, interest, taxes, and other expenses. And the formula is net income equals total revenue minus cost of goods sold, minus operating expenses, minus interest, minus taxes, and minus other expenses. And the purpose is it represents the overall profitability of the company. Net income provides a clear picture of how much profit the company has left after all of the expenses. And here are some of the key differences. The scope of costs. Gross profit only considers the direct costs related to the cost of goods sold. Net income includes all types of expenses, direct, operational, and non-operational. So this, for example, in gross profit, let's say you have a coffee company and you're selling cups of coffee. Well, your gross profit would be how much you sold the cup of coffee for, $3, minus your cost of goods sold, minus how much did the coffee cost, the cup, and the lid. That's it. Meanwhile, net income would be how much was the cup of coffee, your revenue, minus the coffee, the lid, the coffee, the lid, the cup, your logistics expenses, your taxes, your interest, maybe your rent, all of the other expenses. That will bring you to your net income. So the level of detail in gross profit is an indicator of core profitability of sales and production, while net income shows the final profitability after accounting for all business activities, like what I just explained, right? So let's say you're selling prefab homes. Your gross profit would be you sell the prefab home for 100,000, and all the materials and labor that it costs to build that home, it costs you 75,000. So your gross profit is 25% or $25,000. Now, if you want to include the rent warehouse and your interest charges at your bank and your phone line and your internet expenses and then your taxes, and you can't forget Uncle Sam, that brings you to your net income. And let's say after all those expenses, right, you're down to $90,000, or it costs you $90,000. So now you have a 10% net income, right? Because you only made $10,000 on the 100,000. Use cases for the differences. Gross profits help evaluate the efficiency of production and sales processes, while net income is used to assess the overall business profitability and performance, impacting decisions and dividends and reinvestment or expansion. Okay, so in summary, gross profit shows how well a company generates profit from its primary activity, while net income indicates how much profit is left after all expenses, providing a complete view of the financial health of the total business, not just a product line. Okay, so again, one more time, everyone asks me this question all the time. What is the difference between gross profit and net income? And in short, gross profit only accounts for the cost of goods sold. Net income accounts for all of the business expenses. So for example, if you're selling a widget for $10 and it costs you $5, to manufacture or $5 to import, then your gross margin is 50%. Your net income accounts for that $10 widget minus the $5 for cost of goods sold, and then minus all your other expenses, whether that means internet, telephone, your employees that it takes to ship and pack those things, the rent, the overhead, your taxes, right? Once you subtract all that, maybe that $10 widget that you made for $5 had an extra $3 of expenses. Okay, so five, six, seven, $8 total, and there's only $2 left. That's your net income. Okay, so that's the biggest difference between gross profit and net income. I hope that helps. If you are developing a business plan and you're developing financial projections, make sure you include both your gross profit and your net income.